Hi, I am Rajat from breakingtrade.com. So, in this lesson, we are going to understand the auction theory of market. We all know market does not remain at one point always. Market moves up, market moves down, market moves sideways, market trends up, market trends down. So, we are going to understand what how we can trade with this or how we can take the advantage of it when we know how the market is moving or how the market is auctioning. Okay, so in the previous session, I told you about the other time frame buyers and sellers and local traders. So we all know other time frame buyers and sellers are those traders who can move the market, who have higher power than the local traders. They have more money, they have more capital, and they can significantly affect the movement of the market. Now, in auction theory, first we are going to understand is balance and imbalance. I again apologize if I have not before for my writing, which I know it's quite poor. So we have balance and imbalance. Now, what is balance and imbalance market? As if you remember in the first session, in the first video, I have shown you a game in which there was a conclusion that market mostly trade like this. That means this is the fair value of market, and these are the extreme. So most of the time market trades into this range. And if you analyze the market or you take down the history of market, most of the time around 70% of the time market remain in balance, and it is only 20 to 30% that market goes into an imbalance state. Now to make you understand better what is balance and imbalance, let me take you to the market profile charts here. So balance state, as the name suggests, means market is moving in a balanced way. Okay, that means market is moving in a tight range, in a predefined range, and it is not able to break the range. Okay, so if I take the example of say any stock, let's take the example of say Reliance. Now see, if you take these particular 5 days here, now this is what market is trading into a balance state. Okay, means market is moving in a tight range. Tight range does not mean very small area. Market may move like if you see the range here, it's 42, 47, 50, 59, and 80. So average range would be coming around 55 to 60. Okay, so this does not mean that there should be a tight range means 10 or 5 units. It means that whatever the market is doing for the consecutive number of days, it is not moving into a one particular direction. In another way, the value area formed by the market on each day is overlapping. So you can see here the value area formed by the market on second day is overlapping with the third day. Then on the fourth day again it is overlapping, and on the fifth day also it is overlapping with this day, with this day, and this day. Even this also concludes into the balanced market, because whatever the range of the market is for the next consecutive days is inside this particular range. So balance means market is moving into the previous day ranges and value area is overlapping. So this is the first, technique to know whether the market is in balance state or not. If the value area is overlapping, according to me, this is a very good indication that market is moving into a balance state. Now take you to more examples. Say, let's take, mm, let's take, mm, we let's take Cipla here. Let's see what it is doing. Now, okay. Now see this Cipla also. Here also you can see mark Cipla is moving into a balance state. The above range is around say 770. 8 7 say 780, and below range is 744. So you can see here the market is moving into this range, though value area is higher there. Now take these days, value area is again overlapping. This value area is overlapping with this value area, though is not overlapping with this, but this value area is overlapping with this. Same, this is overlapping with this, and this is like this. Now on this particular day, which is today 4/11/20, market has moved upwards, breaking the past 6-day range. This was the 6-day range high around 780, and market has moved upwards. So this is the first time. We cannot say this is a balance area, though this we can argue that this value area is bit overlapping with this day, but it has also broken this particular range. So I would say this particular, see, balance, uh, whether the market is in balance state or not, it defines after 2 or 3 days. So if again, if market is moving tomorrow in this particular range, or value area is moving again, overlapping again, then again we will call this a balance area. But the first sign is that we have a buying tail here, you can see, and we have an open drive, and we are breaking the range of past 6 days. So this is a first indication that Cipla is breaking the balance state. Okay, I try to see if I could find more examples for the balance. Let's take, for example, Colgate. Now see, this is a very good example of balance state. Now, initially, market broke above, market came into an imbalance state. So this state, this day movement is the imbalance. Market has the open drive here. I'll come to these terms later. So you can say buying, market has the buying tail here, and it was a trending day. Now after the trending day has been set up, you can see for the past 1 2 3 4 5 6 days, market is in a complete balance state. The value area is overlapping, the days range are overlapping. So what lies next? Now according to uh, whatever the chart says, that as the market has gone into an imbalance state, and after that market has come into the balance state, so this imbalance state has been accepted. Now there could be, if there is no any negative news for Colgate, or if there is no event for major event for Colgate or market, then you can say market or this particular stock Colgate may move upwards, resuming the balance state. So I want you to learn is that market is, this is, you can say, sideway movement is a balance state, then market goes into a imbalance state. So this is, I would say, balance, this is imbalance, then again market moves into a balance state, then again market may go for the imbalance here, or market goes for the imbalance here. This is again imbalance, this is again imbalance, and this is again balance. So most of the time, I would say 70 to 80% of days, market remains into a balance state. 20 to 30% state, market remains into the imbalance state. This is balance and this is imbalance. So first thing, for the imbalance, for the balance one, value area overlaps. Okay, this is for balance. Second, the range of market also overlaps. So if the value area overlaps, this will automatically comes true. If this is true, this could are a higher chances that this is also going to be true. Okay. So this is what balance is, and in imbalance state means which is not balance, we have other time frame activity. Other time frame imbalance state has, first we might have a buying tail, buying or selling tail, and then we might have Single print. So I'm not going to explain what is single print. In session 2, I have explained what are single print here. Single print are those single TPOs which are not in the session A. Okay, so this constitute the balance and imbalance state. Okay, so hope you understood what is balance and imbalance state. After that, once the balance and imbalance has been formed, we come to know whether the price has been accepted or not. So how you come to know this? As I explained you here, suppose market was in imbalance state, then market went into the imbalance state. Now you want this imbalance state to be accepted. Once this imbalance state is accepted, there are higher chances market will resume into the same direction of imbalance. Means market move upward, going imbalance. If the price is accepted, market will move again upwards, resuming further. There are higher chances. I'm again saying it's not 100% correct, necessary, but probability is more. Trading is all about the probability. So for this Colgate part, like I could see this, if this was the imbalance state and market was came into this balance scenario, so we have the chances of market going into the direction of imbalance state, that is market moving upwards. Okay, let's take the new line. So now second thing comes as responsive buying and selling, and within this we have initiative buying and selling. Okay. Now, what is responsive buying and selling and initiative buying and selling? Responsive buying and selling means what is expected behavior. So if I ask you what response means, what in simple literal terms, what response means? If someone hits you, and if you are not a follower of Gandhi, you will hit him back. Okay, this is an expected response from you, which is more common. But if there is some person who is a Gandhian or who follow the Mahatma Gandhi, then he'll not hit you back. He'll provide you the other cheek of his face. You can hit it back, which is very rare in today's time. And what is initiative buying selling? Initiative buying selling is that is an unexpected behavior. So again, I'll explain you through charts what does response buying and response selling means. So So in recently I saw the chart of Reliance. I was trading it, so I can explain you responsive selling in terms of Reliance. Now understand like this. Now you can see Reliance is in a balance state here. Now market is opening below the value area low of yesterday. So if the market is opening below the value area low, so there are more if the market is a balance state, or if you are experiencing a normal behavior, then you may expect, okay, market may move upward, it may move upward, then it may move downwards, and it will again uh, be into this same state. Like here you can see market opening below the previous day value area low, and then market started to move upward. So this is a responsive thing, responsive behavior. Okay. Now, what is initiative selling, which I was talking about? Initiative selling is if the market is opening below the yesterday value area low, for an example, and we are seeing the selling here. So as soon as the market opens, market just tested here, and there was selling tail form here. If you take this particular thing, it is from 2038 to 1970. There is an initiative selling here. So this initiative selling is done by the other time frame sellers. Okay. So this is the difference between responsive selling and initiative selling. Initiative selling is always more effective than the responsive thing. Responsive means if the market is trading too low, then there's a response of the buyers and they come into effect, but they won't take the market too much high. They will only push the market upward to the previous level. But if there is a initiative buying means market has opened already higher and still market is moving upward. So in this case we are talking about initiative selling. So you can say market has opened lower than the previous day low area and there was an initiative selling into the first session. So here two things are happening. Market is breaking the range of balance state. If this was a balance thing, market is breaking the balance state, and also market is doing the initiative selling. So you can see there the effect of this is that market, this particular Reliance stock has almost fallen to 9% on that particular day. Now again, this was the imbalance state. Now the market has formed the balance state. Market is trying to do the balance. So the value area formed is lower here from this day. And on this particular day, the value area is not formed lower, but it is more elongated. And the POC is higher. So understand like this, though still the market, this particular Reliance stock is trying to find the ground downwards, but there has been a bit of responsive buying here in this particular uh, area in which the POC has formed higher here from this particular day. So had the POC formed lower from this area or the value area would have formed lower from this particular day, we could have said that okay, though market is trying to form into the balance state and the sellers are still in control here, we cannot say that buyers are in control. Still sellers are dominating here because this is an initiative selling here. But we are getting a little bit glimpse of that. Okay, selling is not that more, you can say, effective here. Means the power of selling is little bit diminishing, though it's just the second day after the balance state. So this is a very interesting thing to watch out for the Reliance stock for the next day, how the Reliance is going to behave. Okay, so this was the initiative selling. Let's take the example of initiative buying. So we take any stock, say State Bank of India. So in the State Bank of India also, if you see, market opened gap up almost from the last day. If market has closed from 198.1 and market has opened on 190, so in 198.2, though there was a very small gap up, but still market has opened gap up, and then there was an initiative buying, which is taken, which took the market upwards. You see here, okay. So had the market opened upward, had the market opened gap up, which we are seeing in this particular case, if there was a responsive thing, there would have been responsive selling. Market must have come downwards into this value area of yesterday only, which we would have said, okay, this is a responsive selling. But here we are taking the, we have seen the example of initiating buying here. Okay, let's take another example. Let's take some pharma example. Yeah, so this is also a very good example of initiative buying. Now see, Sun Pharma was also trading into a balance state. You can see value areas are overlapping, areas are overlapping. Here you can see the value area started to form upwards a bit. The POC is getting higher. And on this day also POC was a bit higher. Then in the last uh, half an hour or hour so, market started to move upward. Okay. This particular LNM region. And then this was formation of you can say started of imbalance state, then market opened gap up. Now this particular state, as soon as the market opened, it is into an imbalance state. Now market needs to find balance. How can market need, how will market find the balance? Whether market will come downwards and will start to trade into the previous day range and previous day value area. But here we saw there was an initiative buying into the first hour only. So we can see market is an imbalance state, and market, in order to find the balance state, we have that initiative buying, and after that market found the balance here. So this is again a very good example of Sun Pharma, which according to the charts, may you may see that Sun Pharma may move upwards from here, or market will Sun Pharma will try to find the balance. It is very important for Sun Pharma to maintain this particular gap up. Okay, for Sun Pharma to move upward, it should not come into this particular region, because that means whatever the imbalance it has formed into this particular day, on this particular day, it would be rejecting it. So either the Sun Pharma should move upward, or uh, it should at least find the balance, that it should at least move into this particular range only to for the price to be accepted. So the thing which I was telling you, this was the responsive buying and selling, and initiative buying and selling, and we have price acceptance. So when from balance to imbalance goes, here comes the price acceptance, and then again it decides the direction. And if the price acceptance is into the imbalance direction only, then there are higher chances that market will move into this imbalance state only direction. If the imbalance was upward and price has been accepted here, then there are chances market may move upward only. If the price, this imbalance has uh, been here and price has not accepted this particular imbalance, that is price is moving somewhere downward here below the imbalance, below the balance opening, then there are chances market may move downward. Now another uh, way to know whether the market is moving in a trend line, or you can say market is trending or not, as I told you before, that if the value area are overlapping, that means there are clear, you can say, sign that market is in a balanced state. But if the value area is keep on rising each day, that means there are more, that means that shows that buying capability or selling capability is more. So let's take the example again. If I could remember any stock recently, not this one. You can see again value areas are overlapping. That means this is a still a balanced state for this DB lab. Now you can see in this Hero Motocorp, there was market was in imbalance state, as there was a selling tail also. We have a single print in B also. We have a single print in G also. It's a trending downward state. Then market tried to find balance on first day, second day. So the value area are overlapping here. Okay, and then again market started to move more downward. Okay, so from here also on this particular region 2887, we have more downward direction left for the Hero Motocorp, and market is still again was trading lower for the last 3 days. On the last 2 days, there has been some pickup in the Hero Motocorp. That is basically because of the good result. So you can see here, though this is still the initiative selling, which was the imbalance direction, which was in the downward direction, was so heavy. that for the 1, 2, 3, 4, 5, 6, 7 days market has not able to go past this particular level. The range which was, Hero Motocorp was trading around 3117 on that particular day. So this selling was so hard, though still it is trading at this particular region only. So I'm trying to find the example in which I could get the value area going into one direction. So this state is balance one. Value areas are overlapping. We don't have clear direction. You don't have to trade if you are trading in a say directionally. If you are betting on a higher market to move up or lower, or you know for a significant move, then if you are finding these balance days, then it is better to avoid on those particular days. But if you are into option selling and you are option selling on both sides, then these days are gold mines that you can sell the option on both sides and collect the premium. I'm just trying to see if I can get any stock from these charts. Okay, let's take Dabur. So Dabur is also in a balanced state. Let's see in the so I'll just try to show you with the example of Infi, though it is not a perfect example. So suppose this value area is forming here, and on the next day value area is forming lower, and suppose on the another day value area is forming lower. So when the value areas keep on forming lower from the previous day, or basically the POC, they are not overlapping and forming lower, then that means market is trending downwards in a slow direction. In a slow direction means there are no uh, huge selling tail or buying tail, in this case selling tail, and neither there is any single bid, but market keeps on moving downwards. So that means with the value area you can know if the value area is forming lower from the previous day, then there's a the strength of the stock is quite less, means weak, and the probability of stock going upward without any event suddenly are very lower. So it is better to trade into a downward direction or towards the direction of the value area. Okay. Now, third thing is I'm going to teach you is, say, failed auction. What are failed auction? When the market try to break the initial balance, and the initial balance, uh, then the market try to break the initial balance, but it fails. Okay, it market tries to break, but it fails. Now, what does it mean? I'll show you the example again. So let's take the live intraday scanner, and let's say if we have any failed auction. So in the single print, I could just print it here, fail. So let's take the example of Dabra here. If I click on this chart, so see here, see this was the initial balance formed by the market from this particular 518 to 527, and in the C period market tried to break the initial balance, but market fails. Now why, what do I mean by saying that market fails is that within the half an hour session, that is within the C period, market comes back to the initial balance range, okay, this particular range, and market do not cover the single print of this C. At least three single prints are formed by the failed auction. That is, at least three single prints should be formed by the C here for it to be, coming under the failed auction concept. So when the failed auction is there, market on that particular day moves downward. But there's a catch here. Failed auction theory also says that within the next day, or say with the time period of 3 to 4 days, market again try to cover this failed auction. That is, market again try to visit this failed auction. So if this stock is Dabur, so Dabur has failed on this 530 particular thing, that is price of 530. So failed auction theory says, though on that particular day the probability of market moving downward is higher, that is the failed auction has turned into the downward direction. Market tried to go up but it failed, and market closed at the low also, you can see, at 590. But it also says that if the failed auction has happened, then market try to repair this particular failed auction, and market will try to revisit this particular area again within the 3 to 4 days. It may happen tomorrow also, it may happen 2 days after also. So I'll take more example. Let's take Colofin here. So see, in the Colfin also here, the market tried to break this particular range. I'll show you in these charts. So in Colfin, you can say this was the initial balance, that is 295 point C, and in the C period, market tries to break the initial balance. There were 1, 2, 3, 4, 5, 6 single TPOs formed above, but within this C range, market came down. Market revisited the initial balance, and then you can say market broke the other way of initial balance, and it came to low, and market closed around somewhere on the lower side of the market, that is below the POC. So again, the theory says that within 2 to 3 days or 4 days, market may revisit this particular area again, and we call it repair. So understand the difference between these terms. Now when you go on this live intraday scanner, you will see, I just reload it. So in this single print, when you do the filter thing here, and you will write say failed, so you will see here fail to go down, fail to go down, fail to go high, different thing. So failed auction is that one which happens into the C period. Okay, so whenever you see fail to go high, fail to go down, and it is happening into the C period, that means it's a failed auction. Difference between failed auction and other things whether market failed to go high or down is that failed auction is generally visited by the market in upcoming days, whether it is 3 days, 4 days, or the next day only. That is within a week, within 4 to 5 days, you can expect market to repair that particular failed auction. As I explained here, where if the C period is here, there is at least three single TPOs. Now, more the number of single TPOs, more is the authenticity of failed auction. So on that particular day, If the failed auction has happened on the upside, that is market failed to go up, it is better to take trade in the downward direction. But keep this thing in mind that this particular area is going to be repaired and market may visit this particular area again in upcoming days. Now normal fail to go high, fail to go down, we can see here. Let's take example of normal Grasim here. So in Grasim, you can see the market try to fail go down, but it's into the I period here. So the market move upward, but it did not move very much upward. Means till the J and K period it moved upward, but again it closed at the lower side of the market. Let's take example of say Concur here. Similarly, market failed to go down into the H period and market moved upward and closed into the middle. So this is not a failed option. This is that market was trying to go down and it is type of support. That market took the support at the lower side. There are three single TPOs in the H period, and after H period neither I, J, K, L were able to break this particular or try to revisit this particular area, price area in upcoming sessions. So this was a single print in the H period. So on the candlestick, you will see uh, a buying tail type of thing. Okay. If I say example of Biocon here, so similarly you can see in Biocon, in the I period market, in the H period it came down, in the I period it tried to came down more. Now there was single print formed by the I period in the downward direction. That means it is like a fail to go down, and you can see market close at the high. So understand is that whenever you are having fail to go high and down, fail to go down is colored in green color. That means market was trying to go down but it failed. So that means probability of market going up is more from here. Fail to go high is in red color. That means market was trying to go high but it failed, and the probability of market going down is more on that particular day. If it is a failed auction, then that means there are chances that market will visit that particular area again. So in this particular session, we have understood very important thing, that is balancing of the market, imbalancing of the market, acceptance of the market, price acceptance of the market, how the value area defines in which direction market is moving, and failed auction theory, and whether what is the difference between failed auction and fail to go down and fail to go high for the other periods. So I hope things are clear in this session, and you can always use this live intraday scanner. It will give you, you know, updated values and real-time scanning that you don't have to do manually. So use this particular feature in your intraday trading and short-term trading, and it can make wonders for you if you learn to use it right. Thanks for the session, for watching this video. I will be coming with more videos, more sessions. Till that time, thank you. Bye bye.